Palab Banerjee, MD and CEO of Pearl Global Textile Export Company. Palab, this is the relief that the entire industry was waiting for, isn't it?
Good morning, Tamanna. Yes, it's an excellent news. I think we have waited long enough.
Yeah.
That says it all.
That says it all. Palab is almost speechless. Okay, what does it mean materially? What does it change materially? For that, you have to give us context of what was going wrong. In the sense, were orders being pulled back because it just cost more to import from India? So what changes materially?
So any US customers or brands or retailers who are importing from India were subject to pay this additional 25% of penalty tariff. And compared to our competition, who are mainly in 19 to 20% range, we were paying a reciprocal tariff of 25%. So that will give almost a differential of 30% higher tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries. So these are the major apparel exports, or I'm representing apparel exports. I'm talking more from apparel only. So this is what the advantage that immediately kicks in. Now, in the last 6-7 months, most of the players of India in apparel or in textiles were giving this discounts so that the importing companies or the importing retailers and the brands were not paying this 25% penalty or this 30% difference. Now, immediately that improves the bottom line, which we saw was compressed in the last couple of quarters. And in terms of growth, like for example, if I talk of Pearl Global, we have been a growing company. We have been diversifying into all the markets. We could not grow this particular year for India. So that's something I think that restriction is being taken off.
Palab, good morning, Alex here. So a lot of textile companies, and this is the word on the grapevine, were also looking at alternative locations to ship to the US. And I'm wondering whether all of that kind of gets unwound and whether that will take a little bit of time to pan out. I do not know if your company adjusted things as well, but what do you think will happen and the timelines within which this will be reversed?
So, for example, if we talk of Pearl Global, we have been a global manufacturing company. We have manufacturing across Indonesia, Vietnam, Bangladesh, India, and Guatemala. So not a big change for us. Yes, there was the pressure from our clients to move the US portion of the business to the other manufacturing locations with a better tariff or give this kind of discount. So this pressure was taken off for a company like Pearl Global. Many other companies who were only manufacturing in India, they were immediately trying to look for some alternative, either to do some kind of manufacturing in other countries. So see, most of them, what I know, was waiting and giving this, discount or taking that bottom line hit because everybody believed that this will go away. Maybe it will take 1 quarter or 2 quarters. So yes, as it was going into the third quarter, people were losing that hope, and so I don't think it will too much of a difference of bringing that business back for others who didn't have that kind of investment abroad. For Pearl, we have been always a global, and we are trying to service the global market also from the global. So every country has got some nearshore advantages and certain strengths that we always capitalize upon. So that's not much of a change.
Palab, specifically for Pearl then, and just to help us understand and potentially your investors to understand as well, if you can describe the kind of shift in manufacturing and maybe capacity utilization back in India as well, and how that will change your performance perhaps in the fourth quarter as well. We're just not even midway through the fourth quarter.
So we have almost about, if we see last year's number, almost 25% of our top line was coming from India. And the balance, 70 to 75%, was coming from the other countries. Now, we have been growing every year, like we have given some growth. What was happening for these last 6-7 months, to grow in India was very difficult. So other markets like Bangladesh or Indonesia or Vietnam, we are experiencing that growth. Even for this year also, we'll see that growth. But for India, this year we could not grow. Now with this kind of change that has happened, and of course, like it's not only the U.S. Trade deal. The good news that came in the last few days or the few weeks is also the European Union trade deal. That's also a very big market for India. So those are the advantages that we will see. The UK, the European Union, and now the US. So this is something like, to set up a good infrastructure of manufacturing and exports, we need a couple of things. The easy capital, let's say ease of capital, ease of labor and labor laws, ease of raw material, and of course these trade deals and the access to the market. So if you see, like, most of things are being talked about in the budget, like we heard a lot of things about it, and now these trade deals are coming through. So it seems to be like, we are very strongly as a country on the right track for manufacturing and for the exports. So it's overall a good news for us as well, and everybody else in the industry.
Hi, good morning, Neeraj here. Just one question.
Yeah.
Can you just simplify it for us? If the deal would not have happened for the whole of 2026 versus the tariffs now gone away, what is the difference in either operational metrics or profitability or whatever metric you can kind of lay it out for us so that people understand the magnitude of this?
So immediate thing is that to sustain the business in India for a market like US, all the players were giving this discount. So this 30% difference between the other countries and us, or even if you talk about only the 25% penalty, so that was equivalent to almost a 15% discount to just compensate that 25% penalty. And if you are supposed to, bring in the difference of this 30%, then that means 18% discount on the first cost or our selling price. So that is directly hitting the bottom line of the Indian operation for us and for other players in India. That immediately goes off. So yes, in the fourth quarter, I think January is gone. If it is implemented with immediate effect, that means February and March, people will see that benefit in the bottom line. The top line may start happening from the next quarters, but this is the immediate.
Okay, so and you reckon, sorry, just Palab, if for your India operations, so for anybody else which has got just a pure play India ops, there is what I heard you say 15 or 18% to bottom line. Is that the equivalent sum on EBITDA as well?
It will translate to that, yes.
15 to 18% difference in EBITDA.
Yeah, if you see the component of the US.
Yeah.
So
agree.
Yeah.
So for a pure play India company which is giving it to the US, that business benefits about 15 to 18%, whatever the number might be ballpark, on EBITDA and on bottom line.
That's the full potential I talk about,
Full
for these 2
potential.
months.
Yeah, perfect. Okay, and the top line effect comes in from FY27. Okay, great. Well, this is music to the ears, and all of us out here in the NDTV Profit Studios, Palab, have felt for your industry all through. Yeah. We've gotten you all the times, and we thank you, Palab, for coming in every single time that we asked you to come. So today it was just apt that we get you when the going has just started to be going good. So guys, I'm just so happy because Palab Banerjee has been with us throughout this painful period, and it's great to have you today as well.
Loving the smile of relief and hoping your investors also have a similar smile on their faces today.
Yeah, because the whole night, most of the customers were talking to us.
Really? What are they saying? What are they saying? Give us an insight. Okay, now that we can come in and place
the calls right from their meetings where they are doing in their offices, because when it happened, it was New York. It was about, I think, 11 o'clock or 12 o'clock. So most of the meetings are on. Yeah. And then, of course, the West Coast and the other parts of the US.
Palab, does this make us more attractive? Does this give us an edge over Bangladesh, Vietnam, other big hubs for your industry?
So yes, definitely. You see, there are two components, as I just mentioned earlier. To have a successful trade, what are the components? Easy access of capital. You have the easy labor and labor laws. You have all the raw materials. Now, if I had spoken with all of you earlier that India had restriction of raw materials because we were not so much into this particular trade. So only cotton is something that we have been exporting. The whole synthetics part was missing. So Of course, in this budget, we saw that there is a mention about various other fibers that is coming in. Yeah, ease of capital has been spoken about. The the whole the ease of doing business in India is being spoken about. So I'm hearing a lot of positive from the government side and from the infrastructure side. So I think I hope like we are entering into a very good phase, which we have been missing in the last couple of years. We could not take the benefit of China plus one and other things. So I think that's something we are seeing that momentum now. And of course, these trade deals and the BTAs or FTAs plays a very important role. And our competition was ahead of us in the last few years, whether it is Bangladesh, Indonesia, Vietnam, Cambodia. So those are the things like we are seeing a change that has happened now. So I think we are entering into a very good phase.